Alrighty traders, this is Blake Morrow and you are listening to the week ahead video for June 20th, 2021. I hope you guys are having a great weekend. I'm going to spend a little bit of time talking about price action today, and we don't have a whole lot of events coming up this next week, but before I get into all that, make sure that you try out ForexAnalytix if you haven't done so. It's only $1 for 10 days. $1 for 10 days. Make sure you download the mobile app when you do that. You can get it in the App Store, the Google Play Store. And then once you do that, make sure you visit our chat room. Our chat room is where it's at. I mean, we are there. And we were talking about soccer on Friday at the end of the day, but you can see all the chatting that goes on. This was at the very end of the day on Friday. Very exciting. And that's where myself and the rest of the team is going to be at most of the time when we're not broadcasting our normal webinars. All right. Also, I need to mention, guys, if you haven't visited tradersummit.net, this is a great place to find all the, if you're just looking to get up to date like every day, and you want to hear from different analysts and hear what they have to say about the overnight price action or things that are moving the market, go to tradersummit.net. We have so many contributors from all over every market, from all over the world that are contributing to this this single site. It's awesome. It's a great place to start your day, every trading day, tradersummit.net. All right, I'm going to talk about some price action in the market, and I'm going to take you away from ForexAnalytix, and I'm going to take you over to the trading view charts because I want to be able to draw on these charts. And like I said, I want to talk a little bit about price action. This last week, we had the FOMC meet, and the dollar has rallied sharply from the lows, and we're approaching resistance. I was warning people at post FOMC, don't stand in front of the dollar right now. And I know there was a lot of people trying to buy the euro as we hit the 618, the sterling as it hit the 618 retracement, trying to buy these dips in the Aussie dollar at the 200-day moving average. But price action shows us right now that there may be some continuation higher in the dollar, lower against some of these major currencies. And I'm going to start with the S&P first. And this is such a key chart that really has me worried that the dollar may have further to go. I think a lot of people believe that the S&P is in a trading range. And at this moment in time, I don't have any reason not to believe that we won't be range bound. When I say range bound, I'm talking 4250 down to maybe 4200. I think that could be a realistic range for the S&P. But I also want to stop here for a moment and talk a little bit about, like I said, price action and how the market closed on the lows. And I think we have to be really careful because we're coming out of what we call an ascending wedge. An ascending wedge is a bearish reversal pattern by nature. And that, to me, has me a little concerned that we might go further than 4,000, to this like breakout point right here. We might go further than that in the event that, the stock market accelerates. Keep in mind, we've come off a massive move from basically for the last year. Post-COVID lockdown lows, a little over a year, we've rallied 95% off the lows. And even, taking COVID out of the equation from the lockdown, when we went on the lockdown last spring, the market's really up 25% since then, from the previous highs to the highs that we hit. It's a pretty massive move year over year, any year. Not to mention that we did have a crisis. Yeah, we can argue all the reasons why we're at where we're at, but the thing is we've gone pretty far in a very short period of time. So the risk of a pullback at this point, I think, is quite high, especially as we go into this time of year. Typically you get the, sell in May, go away as a big seasonal type of trade. This year, probably a little bit higher risk than most years because of the gains that we've seen over the course of the last 12 to 16 months. So, as we move higher, and especially on the slow grind over the last 7 or 8 months, there's a risk that we pull back rather quickly. And really, the reason why that we've moved lower this week is because of the FOMC and because expectations are shifting from how quickly the Fed might raise rates in the coming years. I know I said years, so but it's a change. It's a departure from what was in the mindset of a lot of investors longer term. So because of that shift, we could actually see we saw a big response in the currency market. We may see a continued big response in the equity markets. And if that does take place, the dollar may have a lot further to go. I know if you've been watching our daily webinars, I've been anticipating resistance to really hold here at on the dollar index around the 92.70 level. It is the 78% retracement of the last move lower. We came off of really key support here at 89.60, and there is a risk that we could break this resistance. And if we do, the question is, where could we go? And that's when you have to start looking at extensions towards 94.50. This momentum could really pick up. I mean, I'm not sure if we're going to go there this next week, but I think those risks are building based on how fast of a move we made higher. So I think a lot of the dollar is really going to be dependent on what happens with risk appetite, is what I'm trying to say. So watch stocks, and the fact that we've broken down in the S&P below this ascending wedge trend line really puts in a risk of a bigger dollar move. Now, I don't think all dollars are going to be created equal. If we do see, let's just call it a 5 to 10% correction from current prices in equities. And when I talk about equities, I talk about the broad markets, the S&P basically. Let's say we had a 5% correction to 10% correction. The 10% correction would take us back down to 3,700. Now you might be thinking, well, Blake, I don't know if we could correct 10% from current prices. We could get down to, 3,700. Well, let's stop there for a second. Let's remove this. This little box that I had put in there, and let me draw something for you. Let's take the low from May to the high. And that, by the way, that was a false breakout. And if we stop there, the 161% extension of this move higher after the false breakout will take us down to 38.74. So 38.74 whoops, I drew the 127%. There we go. 38.74, okay, is from current price a 6.5% correction. To the 200-day moving average, let's imagine an overshoot from current prices would take us 8%. So I think it's doable. I'm not saying that we're going to do that. I'm just saying that it is within the realms of possible, especially after such an epic run that we've seen in equities. And if we see something like that, you're going to start to see the dollar really strengthen against currencies like the Aussie dollar that broke out of a triangle formation that could indeed have a lot further to drop. You extend this full triangle. Actually, that's not even the full triangle really, but that would be the low here to the high. The full triangle could be actually quite a little bit more than this, but you can see the Aussie dollar could extend itself down to 72 cents. I mean, that's a pretty big drop. And you can see we've made, a pretty big chunk of that move just this week. At this rate, another 2 to 3 weeks, we could seriously be down at 72 cents. Would that disrupt the uptrend in the Aussie? No. I think this is probably one of those lows that we won't revisit anytime in the near future. However, that doesn't mean we can't pull back some of this move over the course of the next several months. A 38% retracement of this entire move takes us down to 70 cents again. And obviously 70 cents or somewhere around 70 cents is going to be really key support in the event we make it all the way back down there. But like I said, all dollars will not be created equal, meaning that we may see an outsized move lower in the Aussie dollar, where the euro dollar may only drop from 118 maybe back down to 115. And if that is the case, you might be better off trading some of these other currencies, like commodity currencies, that may be more sensitive to a fall in equity prices. So that is something that I wanted to bring to your attention, because I think the price action at the end of the week in the S&P was quite bearish, which could really induce some further dollar strength going into this next week. Now, one of the things that is happening over this next week is we do have the Fed chairman is testifying on Tuesday. Okay. He is testifying on the Fed's emergency lending programs and current policies before the House Select Subcommittee on the coronavirus crisis via satellite. So because he's going to be talking about these lending programs, he might take this opportunity to talk about these programs and talk about it is an emergency program. And as we come out of this emergency, being the virus, perhaps that does stoke a little bit more fear in the market that the Fed may reduce bond purchases at a faster rate moving into the future. If that's the case, yeah, we will see a continued dollar strength. We could see continued weakness in the equity markets. A couple other things that are happening this week, and before I go over those, let me just say, if you guys really like these videos, please give us a thumbs up. Subscribe to our channel. Appreciate you subscribing to the channel, so this way you don't miss any of our live analysis that we do throughout the course of the week. And make sure you register for the F.A.C.E webinar that we do each and every day for free, because my views between now and next Wednesday may have changed because of developments in the markets. So to get my current view and the rest of our team, make sure you listen to our free F.A.C.E webinar, F.A.C.E webinar, every single day. All right. Thank you very much. And we really appreciate you liking these videos, because it does make myself and the team, feel good about actually putting these videos together for you guys. Like today happens to be my Saturday over our weekend. So thank you very much. All right. So the other couple things that are happening at the end of this week, we have German PMIs, Eurozone PMIs on Wednesday. On Thursday, we have the Bank of England rate decision. And, if you look at the sterling, we have a big double top setting up here. If for some reason the Bank of England just happens to be a little bit more dovish, there's a risk that the sterling could be trading back down here towards the 200-day moving average, but more importantly, down here at 36.60. And hell, if we break through that, we do have a big double top in the pound or in the sterling, and that could really provoke further dollar buying across the board if you see the pound really come under pressure. So keep that in mind as we go into this next week. So guys and gals, I want to thank you all for listening in today, and I want to thank you for your support. Thanks for the thumbs up. Thanks for subscribing to our channel, and thanks for just supporting us for the last, for me, sometimes for the last 15 years, but for our team for the last 5-6 years. We really appreciate it. My name is Blake Morrow with ForexAnalytix. I will see you on Monday morning on the F.A.C.E webinar. Thanks for listening in.